Okay, we're back for our weekly outlook on September the 1st. Now, it is a Monday. The reason I didn't do this weekly outlook on Sunday was because A, I wanted to post the rules of engagement video for the Silver Bullet mentorship, and B, we have bank holiday today on Monday, and I don't trade bank holidays, neither should you, because, well, they're terrible. So, there would be no use in having a weekly bias going into Monday, so we can use the information we get from Monday to conduce our weekly bias. Now, regarding the bank holiday, you never want to trade a US bank holiday because if the US banks aren't trading, then you definitely shouldn't be trading because the US banks are smart money. If smart money isn't involved in the market, then the algorithm doesn't need to give them distribution, it doesn't need to give them smart money pricing. So, what you're doing by trading a Monday is trying to align yourself with the retail and you're trying to get a little piece of the pie, and that just isn't a sustainable way of trading generally. You also have these really small ranges, and you'll also find that it's consolidation that's going to create a range for the next day or the remainder of the week. We've also got non-farm payroll this week, and we'll be going through the economic calendar more momentarily. But for now, we're looking at the weekly chart. And the first thing I'm going to be looking at for the weekly chart this week is this wick. Now, I've graded this wick so that we can see where price is trading relative to this range. Why this wick particularly? Because A, that's the one that we're trading within, and B, it was an outlandishly big wick. It was 547.75 handles, and that range is literally bigger than last week's entire range, and it's just that little wick. So we traded down, and we traded back up, and then we closed there, leaving this wick. So this is going to be influential on this week's trading. We want to use these levels as not support and resistance, but you want to see how price reacts to these, and you can use that to gauge the narrative that price is building up throughout the entire week. And the next thing we're looking at is previous week low. We did sweep that today, and we'll be covering that a bit more on the lower time frames. Then we've also got this weekly order block, and we're trading within that. So any PDRA that we're trading within, you want to at least be aware of. You don't need to mark it up on each chart necessarily, but you should absolutely be aware of where you are relative to those PDRAs. We are now dropping down into a daily chart. You can see that this is the weekly order block that we're using this week. And if I put a middle line on that, you can see that we didn't quite close at that consequent encroachment level, or mean threshold actually, because it's an order block. And that shows strength. And I covered that last week, and we did trade higher. Towards the end of the week, though, on Friday, we got that huge sell-off, and we overlapped the entire, well, most of the price delivery from the previous 4 days. And today we've traded past the previous week low, which is this, by about a handle, and then we've closed inside of the daily fair value gap. So we could still have either a run up to our previous week high, or we could keep tapering and trading with low volume. However, we do have non-farm payroll on Friday, so the chances of that are quite unlikely, and our economic calendar is quite hectic this week. So I'd expect a surge of volume coming in somewhere. We have taken this low. It is, we've only taken it by a handle, so it's not huge. But that technically does allow us to look at the expectation that price could potentially trade higher. But the only way to know that is if we go down to a lower time frame. Okay, so down here on the 4 hour, if we are looking at higher prices where we take out the previous week high, I would want that non-farm payroll also comes out and takes out this low resistance liquidity run. Now, whether that happens on non-farm payroll or a day previous to that, or even next week, remains to be seen. But what could we use to confirm that price is in a bullish market structure? Well, we're getting support off the weekly PDRA, being the weekly order block. We're getting support off the daily fair value gap that we just marked out. We swept this low. We've got the quadrants and the wick on the weekly chart to support us. The next thing I would want to see is, I don't really care about trading above this high and treating it as a market structure shift, because just as you could say it's a market structure shift, you could say this is a turtle soup if we wick above that. So say we were to trade above that line there, I could see that as a potential turtle soup coming and taking out these lows. But For bullish price delivery, I would want to see this fair value gap to be inverted. So I would want price to keep delivering higher past that fair value gap. That to me would be a change in state of delivery. Yes, that would be a change in state of delivery. You can use fair value gaps, getting inverted, so an inversion fair value gap, as a form of change in state of delivery. How you do it, there is a bit of nuance, and some decisions will be at your discretion. They're not so concrete, but in a situation like this, you can absolutely use a fair value gap for an inversion PDRA because it's the first fair value gap before a stop run. Although this doesn't look like a stop run, it looks like equal lows. I show you this one is slightly lower, and I'll confirm it here. So the low of this candle, 23,370.5. The low of this one is 23,371.5. So this candle is literally one handle below that one, meaning it is a stop hunt. And on a lower time frame, it's a big one. Okay, and then I would want to see this inverted. Is that going to happen? I don't know. I'm not predicting it to happen, but I'm saying that in the event that this gets inverted, and this is an inversion fair value gap, I would absolutely love to be looking at long trades up there. Okay, so here we are on the hourly chart, and I've marked out each individual day of the week. And this is Monday. If you're wondering why it's smaller, it's because we skip from 12 p.m. 12 p.m. to 6 p.m. because of the bank holiday, and the rest of the days are 24 hours as normal. So with so many news releases this week, we have a lot of different scenarios where we could play out. However, I want to see this low remain untouched if we're to keep going higher, so I want to see a breakout of this range. Obviously, we're going to open up at 6 o'clock, and then whatever that new day opening gap is, I want to see how that's used going into tomorrow. And then hopefully we don't have any huge moves going into the market open, and the market open will do its thing, and then the PMI will do its thing, and that's when we'll be looking for a silver bullet for higher prices. That would be the ideal scenario. Whether or not that happens, I don't know, but aligning that with the silver bullet mentorship that we're doing right now, that would be where I would want to look for a silver bullet, and I would probably be looking for longs. Obviously, it depends how this plays out. Then on Wednesday, we have JOLTS, that is another high impact news event at 10 a.m. Thursday, we've got more news. We've got a lot. We've got ADP for the non-farm payroll, unemployment, and then 10 a.m. PMI services. And Friday is non-farm payroll. So the protocol for this week is I'll be trading Tuesday and Wednesday. Then Thursday will be tape reading in live stream, and then Friday will be trading after 8:30. The protocol for NFP is that you don't trade on Thursday, and you ideally want to be done after the morning session on Wednesday. For me, normally I don't follow that protocol, and I'll trade every day except on Friday in the lead up to non-farm payroll. I'll wait for that news release to be done, and then I'll trade after that. But if you're a beginner trader, you should absolutely be avoiding Thursday, and you should just tape read it and observe how it behaves differently to recent Thursdays or the other days of the week. Then on Friday, when the non-farm payroll data comes out, hopefully that either delivers above the previous week high, or if that happens earlier, I would want to deliver above this low resistance liquidity run down there, or up there. So you've probably noticed that I'm not really making a huge this, and then that will happen. This week, I'm going in a bit more adaptable, and I'm going to be agile and quick on my feet rather than looking for a specific thing. So I have situations in mind where if we invert this gap, I'm looking for longs going into Tuesday, but I'm not saying this is going to happen and that's going to happen. Why? Because we've had a bank holiday on Monday, so I want to see how we use this range in Tuesday. Are we going to go below this low, which is a protected low, and then keep dropping lower? Or are we going to invert this fair value gap, treat that as a change in state of delivery, and then use that to go higher above this previous week high, and then our low resistance liquidity run? So I'm not saying what I believe would happen because I don't have any firm, concrete beliefs. I'm laying out scenarios in my head where I can wait for it to happen and then I can trade off of that. Because I don't need to predict what the market's going to do. I can have an idea of expansion, and I've said that already. I would expect expansion to the upside. but I'm not going in with that and saying that's all I'm looking for, because this week is a bit more uncertain with non-farm payroll, the first week of the month, and then we've also got the bank holiday from Monday. So you really want to wait to see how Tuesday uses the range that we formed on Monday. You also notice that I'm using the midnight to midnight time rather than 6 o'clock to 6 o'clock being settlement. That's just personal preference because I look for power of three. You could use 6 o'clock settlement price. However, it's good practice to be using the true day open, which is midnight. And the best scenario for a long would be because this fair value gap is at equilibrium and it would have a tendency for consolidation around equilibrium. That's with anything, and that's the equilibrium of this dealing range. I would want it to be traded through with either 10 a.m. PMI or the 9:30 open, and then we treat that as our change of state, and then we can get any kind of internal range manipulation. So if we trade up and then we take it with PMI, best situation for me would be to manipulate a low like that, an internal range liquidity low, and then trade towards the previous week high. Not saying we'd get it in that same day, but the idea is there that this would act as a magnet. Also a note, because it's bank holiday, you want to be using the new week opening gap from last week. You don't really put too much emphasis on the one this week because it was formed on the bank holiday. It's just less reliable as according to ICT. So you still want to use the last four from previous weeks rather than this week. You can still mark out the current week one, but don't expect it to be as sensitive, as reactive, or as heavy of a draw to price action. And just quickly on the 15-minute, you can see that we consolidated there. We drop lower again, and then again. This could be the formings of a market maker model on the 15-minute chart, especially with something like that. And we distribute higher. We want to see an inefficiency created, and then potentially react off that SIBI, trade lower into whatever inefficiency is created as a low risk buy, and then invert this fair value gap, and then either trade back into it or just keep going up into the original consolidation high, which would also align with our previous week high. These highs here look very engineered, and I can't see us having reversed like this and then ignoring those highs, especially when we have an underlying expansion idea on the weekly time frame that we would likely be going towards the low resistance liquidity run. Again, that's not to say we'll trade to it this week, but I am keeping in mind that we could, because we have non-farm payroll and a bunch of other volatile red folder news events. But that's it for this week's weekly outlook. Thank you for watching. Hope you gained something. And the stream schedule for this week, they're going to be starting again from Tuesday, Wednesday, Thursday, and Friday at the AM session, 15 minutes prior to the AM session, 2:15 p.m. UK time, 9:15 a.m. New York time. So if you want to be looking at those, we'll be tape reading, and we have some good lessons to be covering this week as well regarding low resistance and high resistance conditions. So that's it. See you soon.